I want to share with you in this video a hack that helps me win more trades, okay? And it all boils down to a simple idea of scalping futures. I mean, it doesn't matter which market in particular, but I want to let you know what this hack involves, okay? And if you try this yourself and back test it, but you've got to make sure that you are taking trades at zones, meaning around supply and demand, that makes sense, okay? Now we're talking about scalping because that's what I do as a trader. I'm not a swing or position style trader, meaning I'm not looking to stay in a trade for hours on end, okay? Not even like 20 minutes, okay? I'm looking for a quick scalp, no more than 5 minutes, 7 minutes at tops, or less than that I can get in and out of the market and move on. So again, this simple hack, which I'm going to show you, and it helps again increase the win rate if you simply do this by following the steps. All right. So first, what you want to do is always start with a higher base chart, and that's marking up a zone, whether it's supply or demand, that makes sense. In this case here, like for example, I want to show you a trade that I took this morning. And some other people that are part of the Discord, meaning members that are part of that community, took the same trade, okay? Now, we're scalping. We're looking for, when it comes to trading, in particular the NASDAQ 100, I'm looking to try to get a minimum of 20-point run, okay? If I can capitalize on that, the first 20, and then after that, maybe possibly leave a runner, because sometimes you can pick up additional points. So what you want to do is be able to identify the movement or the direction of the market first. And what you see here, I had this zone marked here. This is a mitigated zone, meaning one where there's a gap at. But as you can see, with the market moved away from it and then it broke this area of structure, it didn't come back to it during the session. All right, at least not now. Okay, and I'm going to be mindful of moving forward, you know, because we're bullish to the upside if it does come back to it, because then it would have taken a period of time for it to come back. And lots of times, I've stated this in videos, if the market takes too long outside of a session to come back to an area, be mindful of that. Place that area with more caution, okay, and more emphasis around that area. The zones that tend to work out the best are going to be zones that where the market creates a supply or demand zone, in this case here, this demand area, and then comes back to it. All right, we're looking for quick scalps, and using this hack, which I'm getting ready to show you, because the hack is really nothing more than just being able to mark up the higher chart, but we want more confluence, we want confirmation, we want the trade to be on our side, and what helps us or be able to do so is the fact is using chart confluence, being able to move down to a lower base chart, because we see something happening on one side, but we also want to see it happen on, you know, on the other side is just as well. So when we bring these two things together where they're simultaneously moving in the same direction, then it helps us overall have more confluence and more confirmation for a trade setup to work out. So we mark a zone right here. I mark this area here. We see with the market pushed up, pulled back, and then broke structure above. The breaker structure, BOS, is one of the first signs or identifiers that I look for. Okay, I want to see a breaker structure, but also want to see, was there a zone that was created, in this case here, this demand area, off that breaker structure? There was, and there was a gap back at the zone. So when the market comes back to this area, yeah, it didn't tap it and then rush back to the upside, but it still did reject it. On this 120 range higher base chart, you know, it doesn't look as, you know, eye appealing in a sense to where, okay, we got a nice run back to the upside. Now, if you pay close attention, what happened here is that they did reject the area. I'm going to show you on a lower base chart, because that is the hack right there, is being able to move or scale down to a lower base chart to look for an entry point. That's bringing that area of confluence together that in which you can take a trade from. But you could also see they rejected it, but then they came right below and they swiped this area. And that's what I've talked about in many videos of it being a liquidity grab, a liquidity sweep. You may hear as you're browsing across and looking for information surrounding that topic about liquidity sweeps or grabs. But anyways, it does swipe the area and takes off to the upside, simply put, okay? But before it did that, it rejected the area. So I have this area here marked up, and I'm going to mark this off on all charts because we're going to scale down now or move down to the lower base chart, so we can finish up, or I can finish up showing you the hack, how and what I'm looking for to happen on a lower base chart. Again, we're looking for an opportunity of going about scalping, so we can, which will help us increase our win rate and for a trade working out. So let's move down to the 120 right now and coming back to this area. So as you can see, this was that push to the upside, okay? And then the market comes back to the zone, as you see right here. Push to the upside, market comes back to the zone. It's going to look a little different because we're talking about from a higher base moving down to a lower base chart. So the market moves to the upside, come back to the zone. Now, this is where things come together. The bigger box is the higher base zone, the 120 range chart zone. Mark that up. That's one confluence. The second confluence is we're also going to be looking for a zone within the larger zone. So a smaller base zone on our 24 range chart, meaning the chart we're moving down to get us into a trade or to look for an opportunity for a trade. So what we can see here is that this was when the market pushed up here, we're looking for a demand zone. We saw a demand zone on the higher base chart, which is that bigger box. Now we got to identify one on the lower base chart, which is that smaller box here. Market moving to the upside, I'm not say chopping, but making higher highs and higher lows, and it takes out this area here. So this area structure right here above 19,288. So when the market comes back and taps or comes into the higher base zone off the 120 range, then I'm looking to see, okay, on the 24 range, is there a zone just as well? A demand zone. Yes, aggressive buying right here, breaking structure. Remember what I said earlier. We're identifying the breaking structure first, and then if there is a demand area that came out of that that breaking structure. So the breaking structure was right here, and this demand area was an area that broke this area structure above. Okay. So when the market gets back to this zone here, we have a zone within a zone. Always think of it like that. If you just kind of write it down or think it or put it in the back of your mind. Higher base zone, lower base zone, and then the last part is just really looking for the rejection piece to unfold. So that basically is the break and close of a candle. Unless you try to get in or want to get in aggressive. I mean, you can. This is a small, very small zone here. So even on a 24 range chart, let's say you got in aggressive right here at the when the market came back and hit the zone. Okay, you'll be getting in somewhere probably around 277, 279 area. The market does come back down to 274. But that's what I always talk about and wait for the break and close of the candle, because that's going to be your signal for confirmation to get in. So if you got in here on an aggressive entry, maybe you got in around 280, 279, somewhere around there. If you waited for the break, and that means aggressively wants to tap the lower base zone, okay, that demand zone. If you got in the break and close of the candle, then you're getting in around 84, maybe possibly 85. And then the market goes up here all the way to 311. Okay. So you were definitely able to pick up 20 points off that trade and some if you were able to, hold it through. Okay. So again, we're looking for the first 20 points. If we look at the the higher base chart, going back to it, there are multiple gaps above. And I talk about these are imbalances resting, okay, or if you want to call them fair value gaps. So the market rejects that area and it comes up here and taps that first area or that gap right here, back at 310 or 311 right there, and then it pushes lower, the market grabs liquidity and then races to the upside. But again, you could definitely pick up your 20 points. I'm showing you this because this hack that I actually use in my trading. Now, just don't wait or look at just one chart. I'm using use things at your disposal. If you are looking at a higher base chart and then you're taking a top down analysis and moving down to a lower base chart to get into a more precise entry point, that's going to help you get into a trade when you need to get into it and be able to get out quick enough as well. Gauging this and taking these trades from a higher base chart, well, you may not get into the trade at the right time. You may get in halfway through the move, or possibly even at the latter end of the move, and then the market comes back against you. That happens a lot to traders, to where they end up getting themselves in a situation of drawdown because they didn't catch the trade quick enough or soon enough. If you do that, or you find yourself in a position like that, then don't trade that particular setup. Just wait for another setup to unfold. If you miss that trade setup, then that's okay. You didn't lose anything. You just wait to trade, maybe if not that day, the next day. But again, this is just a simple hack, which you can do in your own personal trading. But we're using that top-down analysis and moving from a higher base to a lower base chart. But you want to make sure that at both zones, a key part of the hack there is to make sure that you have a gap resting back at each zone. That gap back at the demand zone or supply zone raises the probability of the trade working out in your favor. So again, when you're into the session, look for fresh or newly created zones. Ones to where it's not taking multiple hours for the market to come back to. 2, mark up the higher base zone. 3, and make sure you got a gap resting back at the zone as well. And then 3, when you are identifying a zone on your lower base chart, whatever that may be, I use the 24 range because I trade range based charts. Then you want to make sure you have a gap back at the zone too. The reason behind the gap, or if you want to call it, imbalance back at a zone, or whatever the case is, look, the market has to mirror itself, okay, in a sense, right? So if the market is moving away aggressively from an area, there's a gap back at the zone, the market has to fill in every area. Not immediately, but at some point it will. And, depending on it, it could go back a week and fill gaps all the way back up or all the way back down. So it's got to fill these areas in. And then those areas where you see, for example, like right here, where the market had a nice push to the upside quickly, and you see where it gapped fairly fast to the upside. When it gets back there, you can almost bet or be assured that there's probably orders rested on the table right there that need to be filled. So when the market gets back to the zone, you can expect some type of reaction there. So these are just my little tidbits of information that I like to provide and hacks that help me in my own personal trading that I want to share with you guys today. So if you're not a current subscriber and you want more valuable information and content, I would highly recommend clicking the sub button, becoming a subscriber to the channel. Make sure to turn your post notifications on by clicking the bell. So you'll see that bell once you click on subscribe. There'll be probably a couple of different options there that will appear. Make sure to click the bell to turn all your post notifications on so you never miss one of the uploads. And then last but not least, if you found value in today's video, please make sure to drop a like by clicking on the like button. And that's all I have for you guys today. I appreciate you tuning in each day and on the daily, watching the videos, and see you in the next one.